Hello, today is Wednesday, the 13th day of March 2013. And what I want to do today is try to find out what the fair values of silver, gold, and equities are to the best of my ability anyway. And to do this, I want to first take a look at the prices of 1970s and then work further within that. So we're looking at a 30-day chart with each one of these candles representing 30 days of trading that would go back to 1968 up until the day of the top of around $50 per ounce. And that was on January the 18th, 1980. So what we encountered within this time frame was a bull market from around 1971-72 that topped in 74, went sideways for 5 consecutive years, and had a major push higher. There's your entire story as far as chart action within the 1970s. Generally speaking, when you look at the cycles of these charts, it's very simple to state that the bottom period, prices were extremely way undervalued, but it was extremely cheap, and at the top, the prices were overvalued, which was extremely expensive. So where in the middle would a fair value been during the 1970s time frame? Would it have been within this range? Would it have been this top? Would it have been somewhere in here? After all, what you would normally expect this top to bring is definitely a decent sized red retracement and then settle in at an area. Maybe 12. I would guess just by looking at this, you know what? That's a 61.8% level or a 38.2% retracement. So why not about 12 and a quarter or so as fair value? But we're going to take a look at some other charts now. Let's look at the exact same gold chart for the exact same period now. And this is what it looks like. Same, similar core sort of deal. You have a low period in here, you have your upward trend, some sideways consolidation, and then the upward move as well. Now, it's interesting because this is when they said, oh, wait a second, peoples, you are now allowed to buy gold. Yeah, it was illegal. It was illegal, like cocaine, to buy as well, to buy gold. So crazy. And then notice that the movements go from close to 200 to close to 100. That's like losing half of its value. Oh, scaring you out is basically what they did. So what's fair value again? Is it this high? Is it this area here around the 246 level? Because in reality, what happened with gold is this is exactly where it settled. So you could very easily say that the price of a gold, that was the fair market value at that time frame of the 1970s. Let's continue on further. And now let's take a look at the same time frame ending for the Dow Jones, just more days, the 80-day chart instead, which goes back to the 1940s. So what encountered here, a little bit of sideways consolidation, uptrend, sideways. Very, very simple to say the least. And that's generally a lot of times what happens. So you get to this peak here of around 1,000. And one might say in the 1960s, okay, wait a second, hold the line here. It's got to correct. So now there's a sideways correction. So quite frankly, one of the things I'd be saying is maybe around this 870, 900 mark as a decent area for where it would be a fair value at that time. Let's now move on to some today's information. Let's first take a look at the Dow Jones. And this is the Dow Jones now going back to 1928, each day representing 211 days of data. Large retracement, correction within it, and then obviously there's an uptrend, sideways consolidation, uptrend, and again, an uptrend on the sideways consolidation because the rate of ascent is still in place. So now what is fair value? Well, back here we can say maybe it was 1,000 and, well, that's had a decent size run higher. Let's move on to the silver yearly chart with each one of these candles representing 1 year worth of trading. That's a major correction, which is something the Dow Jones has not encountered since 1929. Let's look back at this again. Okay, wrong chart. Let's, where's the major correction? There's one here. And then, of course, within the correction is a decent one here. There's a sideways correction. And the 87 crash is just merely a small period blip within it. That's it. And then, of course, small corrections in here. That's all that it's endured, where, of course, silver has endured this massive correction, still just trying to get back above its previous highs, just to say the least. Okay, so now with that being said and done, what I've done is just put some levels. So I've got gold at 200 at its fair value. And you know what? I should probably put in between the 250 here. But I'm just going to say 200. Now, the current price is around 1,600. So if we take 1,600 and divide it by 200, that means its current price is up about 8 times from its 1970s fair price. Now, of course, if this was 250, well, that number would be now closer to about 7. Silver, again, 7. I should be probably going 12 on this. But no, I'm going to be nice and generous and say 7. Current price is 29. Divide that by 7, that's 4.1. If I made this 12, then we're looking at about 2.5 of a difference, hardly going up. I have the Dow Jones fair value at about 850 at that time frame. Now it's at 14.4, which is about 17 times higher. The S&P 500, pretty much the exact same looking chart, at 100 as its fair value. You can check the old charts, and you will see about 100 was a fair price. 1550 is the current price now, so it's about 15.5 times higher. The NASDAQ. Well, 137 was a high in the early 1970s. It would then downward retrace and then eventually get past that high. So I'm choosing 137 for the NASDAQ. Today it's around 3240 or 23.6 times higher. Crude oil had a nice little break-in in the mid to late 70s to 14. Currently trading around 93 or about only 6.6 times higher. So with that being said, I'm not going to tell you what fair market value for any of these things are. Rather, that the prices of the equities have been inflated a lot higher than pretty much any commodity that you can imagine. I'm sure you get the price of copper, zinc, platinum, all that type of stuff, and you would see the same similar thing, that the fair value of the 70s is nowhere near to this area here. So again, we look quickly at the Dow Jones chart going back to 1928. Now, what I've stated is roughly when the Dow breaches its highs from here, which back then, of course, was 14,198. I'd want to look for a decent retracement just for the S&P 500 to catch up within its 2007 highs, which is pretty much where we are now, of 14,450. Notice here how you have this low that's lower than this low from a high that was higher than this one. That's telling you actions coming into play. So I could say all you want about shorting at this 15,000 level, but if I would have said the same thing about shorting at 1,000 back in here, well, what are you going to do when it's 12,000? So maybe, just maybe, we're going to go 10 times higher again and see 150,000 Dow or 125,000. And I'll be honest with you right now that wouldn't surprise me if it took place, but I'd also expect everything else to go up with it as well. But overall, the price of the Dow is much, much higher. And let's just look at this again by stating, if everything went up 8 times higher from these levels, well, gold's at 1,600. 8 times 7, that's 56. That's obviously not where we are. Let's do 8 times 850 on the Dow. Then you're looking at about 7,000 or so, and an 800 S&P 500. You're looking at a NASDAQ at about 1,000, and you're looking at crude oil over 100 if you multiply this all by 100. Again, you can take the 250 of gold. Maybe that was the fair value, and the historic ratio of 16. Which would tell you right there that the fair value for price of silver would have been much, much higher. Even 200 divided by 16 would give us a number of like 12, 11 kind of deal. So more reason to tell you the manipulation of silver, but you can see it extremely clearly, of course, on this yearly chart when you have this massive capitulation sell-off, because as I was saying, what would be normal for this type of correction would be a move maybe down to here, but then maybe do something like this, and then that might have been more of a normal thing. And you can see now we're going up to like the $70, $80 range. If, of course, it would have traded closer to that nature, which would have been very similar to how equities have traded. So thank you for watching this video. There'll be another video later on regarding the silver divergence of the Silver Eagle sold. If you've been following the Drudder channel, it's basically a video reply to that. And thank you for tuning in to today's videos. Bye-bye.